Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Euro-dollar, a second bullish white soldier yesterday, closing right on the previously highlighted congestion at 106.13. It seems for now that the recent break out of the previously highlighted mid-July to late October bear channel, which is in bright red on my daily chart, is still on, though I have finessed actually some of the components of the more recent patterns. Specifically, I have lowered the angle of attack of the lower bull channel line of the October-based bull channel, currently 105.36 to 107.30, which for the moment is still not highlighted, and this was to take into account late last week's actions. Back to the original mid-July to late October bear channel. I previously laid out potential topside targets for such a pattern of a primary target X in the 107.10 area with a secondary target X1 in the 108.05 area. These are still valid, though I do note once more the declining short medium moving average coming in from above, and that's currently 106.65, which so successfully capped the market last week. And so far today, a small dip to start, but prices have moved back up over the congestion at 106.13 and pushed up into over the next congestion, the 2020 low at 106.36, and we're now testing the declining short medium moving average. Cable, aka sterling against the US dollar. A combined key reversal up and bullish engulfing pattern yesterday, with prices avoiding the support of the May 2020 low at 120.73 and pushing up to close over the next congestion in the 121.50 area, but underneath the surprising resistance of the short moving average, currently 121.85. The market is still nevertheless towards the end of its recent range, and it still continues to exhibit a wide-ranging indecision between the May 2020 low support below at 120.73 and the overhead 50% Fibonacci resistance of the June 2021 to September 22 move at 123.16. The main feature here had been the breakdown below and out of the March to August rising wedge pattern highlighted on my daily chart in bright red. The targets for such a pattern were a primary target in the 124.10 zone and a much harder to reach secondary target X1 in the 116.05 zone. The primary target was achieved in mid-September, but the secondary target now looks very much out of reach as the market has decided to hesitate within the May 2020 low at 120.73 and the 50% Fibonacci line of the June 21 to September 22 move at 123.16. Now, I was minded to recently retire target X1, but I have instead relented for now. I have over the last few sessions pondered on whether the action since mid-August may not have elements of a bearish halfway hesitation or double bottom about it all. I'm still pondering on this matter. Now, so far today, we're still capped by the short moving average overhead despite penetrating it, and also an unrequited dip below the congestion in the 121.50 zone. Euro sterling, a second, if higher, indecisive spinning top pattern, but one that was a suitable follow-on higher to the previous session's combination of an indecisive spinning top that was also a counter to the counter bullish thrusting pattern. The market once again punched up and this time closed right on the April 2021 high at 87.19. Below, we have the slowly declining long moving average, currently at 86.91, highlighted in gold on my daily chart, as well as the newly highlighted in purple lower time, currently 86.96, of the late August to early October bullish Andrews pitchfork. The middle time, currently at 87.73, is overhead and acting as a rising resistance right now. The recent idea I raised that the move since early September may be a bullish halfway hesitation on top of the recent roof pattern is still front and center, as we have a potential target X2 for this pattern in the 87.95 area. The overall bigger pattern still remains the June-September roof pattern with a potential primary target X for this pattern above in the 87.42 area, and a primary target that in effect has been achieved last Friday and again yesterday, and a harder to reach secondary target X1 up in the 88.18 area. Now, so far today, a higher open and a move up further up to make a new high not seen since early May, as well as formally reaching target X. This time the market used the April 2021 high, 87.19, as a base for the move up, which is actually quite interesting in its own way. US dollar against the Indian rupee. A higher but indecisive doji cross yesterday. After the previous session's indecisive spinning top, so two indecisive sessions one after another. The market again utilized the flatlining short moving average, currently 83.19, as a base and was capped again by the October 2022 high at 83.27. However, this time market did have a close over the upper trend line, currently 83.23, and highlighted in dark blue, and that's of the late July to mid-October ascending triangle. I would not put too much store in this pattern, as it looks like a weak close over the trend line. Overall, we still have a breakout below the lower trend line of the same previously highlighted late July to mid-October ascending triangle, but it continues to be not a convincing performance, if that is to be the pattern ahead. I'd previously laid out potential targets below for such a pattern, thus a primary target X would be in the 82.45 zone, with a secondary harder to reach target X1 in the 81.45 zone. I nevertheless would still, once again, caution you on the possibility of false breaks here in either direction, just in case. Now looking below, we now have the short medium moving average, currently 83.05, and then the late September low at 8300. Meanwhile above, we have the October 2022 high at 83.27, plus the spiking highs of late September and October, just over 83.30. So far today, a lower open and an attempt higher, but stifled by the October 2022 high at 83.27, and at the same time, the breached lower trend line offers some support right now. US dollar against the Brazilian real. A strong second bullish white soldier yesterday that was a suitable follow-on higher to the previous session's combined key reversal up, hammer pattern and bullish engulfing pattern. Indeed, Friday and yesterday's actions encompassed the whole of last week's actions. Interestingly, during yesterday's action, the market dropped down and pierced the highlighted in gold long moving average, currently at 499.46. Also, the upper trendline extension highlighted in purple on my daily chart of the August-September rectangle pattern, currently at 497.80. The rising short medium moving average, currently 498.67 as well. Despite doing this, the market the move lower ran out of steam at the 50% Fibonacci line of the October 2019 to May 2020 move at 496.61 and turned back upwards through all those supports, which are now resistances, and ran up through them to the combination of the declining short medium moving average, currently at 504.63, and the 61.8% Fibonacci line of the same October 2019 to May 2020 move of 505.73. This lesser Fibonacci line is part of the overhead congestion of combined Fibonacci levels, the combination of the fibs at 507.39 and 505.73. I had previously pointed out how especially this 505.73 level was a significant resistance. Overall, in the bigger picture, the market continues to be moving within the breached, but ultimately still valid November 2022 to date bear channel, currently 470.33 to 516.06. And that's highlighted in bright red on my daily chart. Now, the most recent incident involving this bear channel had been the upper bear channel line capping the market in early October. US dollar against the Mexican peso. A third bearish black crow yesterday, but also a hammer pattern as well, that hung onto the neckline, highlighted in bright red on my daily chart, of the July to September lopsided reverse head and shoulders pattern, currently at 18.12.67, hung just like so much washing on a clothesline. This was the first close back below this neckline since mid-October, and the second consecutive close below the combined support of the mid-September to date lower bull channel line, currently 18.31.95, which is highlighted in dark green on my daily chart, as well as the second consecutive close below the late September to date ascending triangle, currently at 18.29.46 to 18.46.10, and that's highlighted in pink on my daily chart. It's also a third consecutive close below the neckline of January to May head and shoulders top, currently at 18.22.04, the one highlighted in purple on my daily chart. Though I am mindful that we have targets further up, the break below the ascending triangle pattern now obliges me to place some potential targets below. Thus, for a break below this ascending triangle pattern, we have a primary target X in the 1767.05 zone below, and a harder to reach secondary target X1 down in the 1704.90 zone below. I'm also cognizant of the action since late September exhibiting elements of a possible double top, and I will develop this idea should the market also do so. Just for guidance, I will still leave, for the moment, the harder to reach secondary target X2 for the descending wedge pattern, and also coincidentally the harder to reach secondary target for the bear channel. Both of these are actually at 1894 even area. Now, so far today, a try higher to the red neckline, but a rejection lower, and breaking now through the bottom of yesterday's range and using the red neckline as a base for the move lower.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.